Here at Longin's Capital, we've spent over a decade building a strong track record with our full suite of services and high performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more. Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundin's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hi, Peter. How are you? Happy October.
Hi, Mel. Yeah, I'm fine. Busy as always. And also, yes, happy fourth quarter.
Yeah, right. And the last quarter of the year already, just as
Oh,
quick
yeah.
as it goes. On my side, Peter, it's a very exciting week. We are wrapping up our final preparations for our next quarterly magazine. So that's the China and ASEAN quarterly. So that's
Oh,
something our subscribers should watch out for coming out real soon.
oh, yeah. Sure. I'm already excited. I'll have the first copy.
You always get the first dibs, Peter. So on to our discussion for today, episode 53 of our Sound Economies podcast. We have a few items on the menu, so to speak. First, we'll look at freshly released report from the Asian Development Bank and how they view this part of the world and the economies leading it. And then we also look quickly at China. In particular, they are on week-long holiday mode, and we'll see what that could mean for the economy. We're also going to talk currencies. There's been some buzz about the dollar, about its supposed weakness against emerging market currencies. So we'll take a look at that. And then we'll also quickly look at the private sector jobs report from the US, where it went down for a second straight month, as well as the government shutdown that's happening. And as usual, we'll do our global outlook, Peter.
Oh, that's a lot.
Yeah, so let me kick that discussion off with the just released Asian Development Outlook from the ADB just 2 days ago, where generally quite a bleaker picture for economies in Asia for the next 2 years to 2026. And actually, Southeast Asia saw the biggest downgrades. They're mainly pointing to, of course, as we have always discussed this year, of course, the higher tariffs and trade policy uncertainty as the biggest reasons for the softer projections in economies, but also in general, worse external environment. And it's also spilling over. For example, China's forecasts have been necessarily steady at 4.7% this year, although slower than 5% last year. But the perceived slowdown in China is also considered a major effect, exerting a major effect on other Asian economies, and Southeast Asia is feeling that hit. So it's mostly pharmaceuticals and semiconductors feeling the hit. And of course, China's softness. And add to that domestic considerations or domestic issues hounding each economy. So apart from Vietnam and the Philippines, everyone else in Southeast Asia is expected to see a growth of less than 5% this year and the next. So, but of course, that's still a very robust number relative to what we're seeing in Europe and the Americas. So, yeah, it is the domestic challenges, that part is what economies and policymakers are trying to work on because that's what they have where they have the most control over. So we see a lot of laws or subsidies being talked about, being floated just to get those numbers up. as a last ditch effort this year, because we know we're on the last 3 months of 2025, just like that.
Yeah.
So that's
Yeah.
what we're going to see in the next few weeks.
Also hard to imagine that if the global growth is sort of a bit under pressure, as it is due to tariffs and just general slowdown, yeah, in also in
Mhm.
the U.S. And the net result of Trump politics is not surprising. It is simply negative for the economy. It will be felt across the world, and the key is how much will different regions and governments do to escape this sort of chill headwind.
Mhm.
As of again, what we look into is saying, okay, how much muscle mass is there in the different countries actually
Right.
to try to escape that unpleasant headwind. And again, it's where we say, no surprise that also Southeast Asian economies feel that their export markets are, are slower.
Mhm.
But where do we find this muscle mass? Also, that is still power, economic power, with on government level to support or inspire the economies, and that is
Mhm.
still what we find in Southeast Asia as sort of the most outspoken is where we find some muscle mass. Yeah, and this is also why we see it as low growth sort of hedge, so to say. As
Right.
it might be that they will also feel a global lower growth, but actually it's still a place to be for investors, and there is so much regional will and power to move, and it is the biggest economic region in the world. So there is, as we trust so much in the region that there will be power enough to move it ahead. Actually, yeah, that is how we see it. Is it a fancy development? No, but it's still we need to maneuver as investors in under these circumstances as well. And they're very happy that we have insight enough about Southeast Asia to feel
Mhm.
to feel comfortable with the exposure there.
Right.
Yeah, yeah. The Asian Development Bank reports are always interesting to read into. As they're of course big, yeah, but
Mhm.
they typically have some articles in the report that are worth to read. So if anybody out there should sort of have a spare minute over the weekend, it is actually interesting to look into.
A crash
Uh,
course on the region, Peter.
it is actually okay. Exciting, Mel.
Right. So actually, the theme of this whole report, or actually of Asia right now, is really to focus on domestic consumption because, as I said, that's really where you can pull some strings without really relying much on what global superpowers are doing right now. And that's exactly what China is trying to do. So, starting yesterday, they are on an 8-day holiday. So,
Yeah.
quite jealous of that, but it's an exciting time for them. So twin celebrations. It's their founding anniversary as a nation. Also Mid Autumn Festival. That's why they're on a golden week. That's how they call it. And to perk up domestic spending, they're offering cash vouchers, cash coupons at hotels, at restaurants, as at cultural events or like shows, really to get people to travel around the country, hopefully locally and not abroad, so that they could really perk up that economic activity that has been slowing over the past 2 years. So they
Mm,
have managed to grow still above 5%, but they know they could do better than that, but it hasn't
mm,
been materializing in the past few quarters.
mm,
So China is actually offering through local governments about 66 million in cash vouchers and coupons, discounts, however you call it, just to
mm.
get people to travel and dine out, check in at hotels, explore the country. And
Yeah.
their optimistic goal is really about 2 billion trips. So that sounds a lot, but we remember that they are a big population.
Yeah.
And it's also tactical since they have been trying to focus on services consumption this time.
Mm,
Manufacturing hasn't been so good over the past 6 months
mm,
because exports have been declining. The front loading has been done, so the numbers look weaker than usual. So that's their strategy. You want people to perk up the accommodation sector, the
mm,
hospitality sector, the
mm.
caterings, the restaurants. You want to see them there. So that's what they're
Yeah.
trying to do. In line with the ADB report, actually. So the focus is really retail and domestic sectors, Peter.
Yeah. And it is interesting. This is not exactly handing out cash, but it is, how to say it, semi. As it is sort
Yes.
of incentives if you do something as private consumer. And the good thing about what China is doing and how they're thinking now, they're thinking in private consumption. This is what we like. Then we are happy. And it can be that the growth rate, GDP growth, is 4.7 instead of 5. That we don't care so much about. As long as they don't do this brainless infrastructure projects that we have seen many times.
Yes.
And that is not only in China that happens; it happens across the world. Yeah, but basically a lot of these infrastructure projects they have a negative return, and that actually means that it's a bad investment also for the taxpayers' money. So these kind of incentives are interesting, and it's as you say, the holiday weeks in China has always been fantastic, interesting. It is where we get the feeling for how are the consumers in their mood,
Yes.
and what we call them as a sort of golden week or in a holiday is it's just a typical consumer week. It's also where people are signing more for also buying houses or condos, flats, whatever. It is big things that are going on. Now, I remember the time when people were using more cash instead of digital payments.
Uh-huh.
It was enormous. As what needs to be transported to the ATM machines to to provide people with enough cash, that was simply a logistic thing of significance for the central banks. Yeah. So thank you to the credit cards and the
Thank
digital
you for the
payments.
inventor of QR code also.
But it is really fascinating what's going on.
It's a
Um,
test, Peter, of how
it is,
far
yeah,
they can take growth without much relying on trade right now.
yeah, exactly, and already sort of 2 or 3 days in the holiday, we get sort of the first statistics of how the turnover has been, and so it's very fascinating that it is almost as it is so close to when people are spending the money, and 2 days after you can see some data on it. So yeah, we will be studying in detail to see what's going on in the Chinese holiday and how much money is handing out. Always interesting. It's always fascinating. Also fascinating with all the people on the move. It is
Mhm.
the whole China is on the move. So don't go there
Yeah, I
as a
pity
tourist.
the foreigners who time their trips
It's,
there because they're going to be competing with everyone else.
exactly. So yeah, but a big week and really important. So that we will probably also touch base on next week and see
Yeah.
see what's going on and how things going.
Peter, let's zoom out a bit and let's look more global as far as currencies are concerned. I know there's been reports describing the US dollar supposed weakness, but we might have other ideas.
Yeah, it's mentioned here and there the dollar's weak, and so fundamentally we disagree. As we just see the dollar moving within a broad range, in particular against the major currencies, and very much particular against the euro. We have had a dollar being strong, that is for sure, and that we had sort of as yeah, market reaction after Trump were elected, and we saw it early this year.
Mhm.
where Lundgren's pointed at the dollar being so strong that it would be a good idea to hedge some of the positions out there
Mhm.
that give us that pat on the shoulder at least. At that time, also arguing that was the dollar into a new trend or trending at a new level. But we argued it was actually just at the outer barrier of the broader range where we see the dollar, and particularly against the euro,
Mhm.
as the benchmark. Now, where we see the dollar trading right now against the major currencies, major Western currencies, is back in the range and not in the outer end of where we see the range, but maybe not precisely in the middle of the range, but not far away. As it's not that far away. Has the move from the strong situation in the early this year
Mhm.
until now, as basically it's trading now, it has been trading since June. Yeah, it was a bit faster than we've seen for years, but that is just because the currency market has been extremely slow for many years. That is a market that can be very volatile, and it of course still happens if an economy is getting into trouble. So it was just because we are used to a much lower currency market than it has been earlier. But there is one particular interesting case still, Mel, and that is pointing towards the emerging markets. So the dollar might seem more weak towards emerging market currencies than to the major currencies. But the real explanation is that it's actually the emerging market currencies that are strengthening. It is not a dollar move, it's an emerging market currency move. And that is interesting. Now we talked about the ADP report and also the emerging markets feeling a bit of the Chile headwind, yeah.
Mhm.
But there is still a capital inflow as we see it into several emerging market countries, and that is not solely to Asian as Southeast Asian countries. That is a bit across the world here and there, different emerging markets, and that is interesting. So there is an investor appetite still for emerging market assets as we see it. It's how the flows are where they're pointing, and we also see it a bit sort of people diverging away from the US exposure.
Right.
That's another story, and we see it a bit underlying. It is actually the case. People are reconsidering US still, and reconsidering in a way they're trying to reduce US exposure. That could easily go on. Also, when we look into the new year, and that's interesting. So this is how we see the world,
Mhm.
and it is not a particular weak dollar. It's just other movements that are generating this picture.
Yeah.
So it was just a comment. And why do we comment on this? Yeah, because currencies are interesting.
Mhm.
But good lesson or experience to have is when investors are investing into emerging market currencies or emerging market assets. The currency is a good idea to see the currency as an asset as well. Because emerging market currencies are more volatile, they have a bigger importance on the total return on the investment. So it has always been good to have a consideration about hedging or not hedging, um, more than if people are moving between the more mature markets. So
Mhm.
that is why we pay particular attention to the emerging market currencies and what's going on there. So yeah, really interesting, really interesting. There'll be more to talk about, I believe.
Mhm.
Anyway, Mel, let's jump back to an important point of data. Yeah.
Yes, in the US, of course.
Yeah.
And actually, a bit of an important detail about this private payrolls data is this is what we're getting for now as far as the job market in the US is concerned. Their government is on shutdown since the 1st of October, so we might not get the usual monthly data from the Bureau of Labor Statistics. So this is what we have. This is what the market has right now.
Yeah, that is the ADP report,
Mm-hmm.
a private agency. Yeah, reporting that once a month, and we will miss tomorrow, as of Friday the 3rd of October. We
Mm-hmm.
will miss the king of data. That
Yes.
is monthly monthly unemployment data from US, and therefore the market is trying to find a substitute in judging what's going on by
Mhm.
using the ADP report. It is a report that has been watched for decades and always seen as an indicator of what is happening when the monthly data always comes out the first Friday in the months from the U.S. Bureau of Labor Statistics. Now, as mentioned, you said we will miss that one, but
Mhm.
what is key about this month's ADP report is the number of jobs that has been reduced in the private sector. And actually, in September, the loss of private sector jobs was the highest since 2.5 years. And the way we would see it, and basically the market sees it is an acceleration of the negative trend in the U.S. labor market. And we also immediately saw that the U.S. Treasury, particularly 10, as the 10-year rate
Yeah.
went lower. So this is a clear indication that the labor market in the U.S. is cooling more. Actually, the movement is probably more accelerating than leveling off.
Mhm.
And again, we can only say the Fed should have taken the jumbo cut in in September,
Right.
and that would be probably the most dominant factor, as a more dominant than what is
Got it.
happening on the inflation here. So yeah, for us, confirming that the U.S. economy is moving towards more trouble and not really looking into a solution. I believe that is the conclusion. Well,
So actually, we've talked about if the Fed knew then what we all know now, the
yeah,
jumbo cut would have been more palatable. But here we are, and of
uh,
course, we await the next Fed meeting in a couple of weeks to see that happen or not happen, depending on how
uh,
the members vote.
yeah, the Fed should listen more to Long Queens.
Let's loop them in right now. So that's another thing that we will monitor as we always do, and we'll
Yeah,
always keep our listeners posted about these developments. And before we wrap up, of course, we do our weekly global outlook, Peter. Let me start with Asia, of course.
yeah,
Despite the slightly bleaker outlook presented by the ADB in its regional report, we still very much see sunshine prevailing in this part of the global economy.
um,
The efforts domestically to boost household and private consumption, as well as to explore alternative trading markets as far as their goods are concerned, is
mm,
providing confidence on top of the innate strength that these economies have, particularly for Southeast Asia and China.
yeah, yeah. It's still holding up,
Mm-hmm.
and we are still also for totally. We like risk and overweight risk still. As we elaborate about last week, could we see some sort of a correction in the markets? Yes, we could. But we are not sort of, as we're just playing around with the sword, so to say. It's on the table, but we are not reacting yet. And actually, even there should be a 10 to 15% correction, let's say, in the stock market. It's not sure that we recommend to react in a bigger way. It could be we say, okay, we go a bit more towards neutral, but we are not there yet. There is still too much sunshine, if we could put it this way. It is not sort of that we are seeing the storm right now, but we just touched the U.S. economy and U.S. labor market. There are a couple of things that we of course take into consideration, but we're still okay, and we play around with the sort about a correction in the market, but it's not now. It can be we change the view in 2 hours or 2 days or 2 weeks, so we don't know. But right now is still just something we could see come, but it's not that something we forecast. So we stay pretty happy.
That's it for this episode. Thank you, Peter, for sharing your insights. And of course, thank you to our listeners as always.
Yeah, thank you.
Thanks for tuning in. We'll be on the lookout for market developments worth watching. catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify. For expert insights on the go, download the Lundin's Investor Insights app for free. Risk-loving investors will find opportunities in our high-quality alternative investment funds, especially our multi-awarded Mutual China Fund. For more, visit lundinscapital.com.